Realtors are sending you all a warning right now. They are saying that home buyers have absolutely disappeared from the US housing market in 2022, and that worse, they will continue to disappear as the year goes on. Because according to the National Association of Realtors, everyone, home sales have already retreated to pre-pandemic levels in late June. And they're predicting further declines in home sales, aka buyer demand, should be expected in upcoming months. Meaning that this softening in the housing market that we've seen in 2022, this start of the housing crash, is only just getting started. It's going to get worse, because if we take a look at the forward-looking indicators for the housing market, which say how the housing market's going to be doing in the next 2, 3, 4 months, they're all dropping like a rock. People applying for a mortgage to buy a house, that's crashed down to its lowest level in 6 years. The same trend is observed with the number of people going to home builders looking for newly constructed homes. We can see that new home buyer traffic is now down below its levels in 2016, 2017. But the metric that I think is most telling that suggests that home buyers have absolutely disappeared is a complete collapse in home tours and housing showings. We know this because the home tour app Showing Time is reporting that, for instance, in California, there's been a 50% decline in real estate showings since the start of 2022. Same situation in Arizona. Home tours are down 42% from the start of the year, and in Florida, they're down 31%. And all of this data that I threw at you basically means that the summer and fall housing markets in 2022 are going to be absolute ghost towns. We're going to have empty open houses. We're going to have listings sitting for 2 months, 3 months, 4 months. We're going to have sellers getting really, really desperate to unload their properties. But one thing you got to remember as a home buyer out there is that not all areas of America are seeing this drop off in home buyer demand in the same way. If we take a quick look at this map, which shows the decline in home sales year over year, there's a big difference between the areas in orange, which have had a massive drop off in home sales, and the areas in blue, some of which have actually seen an increase in home buyer demand. So as always, it's important to remember real estate is local, and with the Federal Reserve and Jerome Powell gearing up to destroy demand in this economy by increasing interest rates and tightening monetary policy, that's going to bring down certain cities and housing markets way more than others. In fact, Jerome Powell just said last week that if you're a home buyer or a young person to look to buy a home, you need a bit of a reset in the market to be able to afford current prices. Powell said that he's aware that mortgage rates have moved up a lot and that there's a slowing in the housing market. And if you read between the tea leaves on those statements by Jerome Powell, it becomes very, very clear that number one, Jerome Powell does not care about supporting the housing market. And in fact, on the contrary, he wants to see home prices go down. Jerome Powell's anti-housing market sentiment is actually something that's being echoed by a lot of central bank leaders around the world. For instance, the head of the Bank of Canada just said that he sees a housing market slowdown as healthy. Meanwhile, the head of the Federal Reserve Bank of New Zealand just said that a sharp correction in home prices remains a plausible outcome. And so whether you're a home buyer in America or Canada or New Zealand, you should pay attention to an old adage that goes like this: don't fight the Fed. Because right now, central banks across the world seem very okay with the fact that the housing market is going into a correction and a crash, and they don't seem to be interested at all in throwing the housing market a lifeboat via lower interest rates or easier monetary policy. This is coming as a big shock to a lot of real estate investors out there who firmly expected over the last 1 to 2 years that as soon as the housing market started to slow, that central bankers like Jerome Powell would come to the rescue. However, that is clearly not happening right now, and it's leading many real estate investors to absolutely freak out. I reported a couple days ago on how investor home buying demand is plummeting in many parts of America. This decline is something you all really need to watch out for in your backyard, because certain cities are absolutely in the crosshairs, especially in regards to home flipping. That's because in the first quarter of 2022, home flippers flipped the most homes they ever have in America. Nearly 10% of all home sales in the first quarter of 2022 were a home flip, meaning that they were sold within 12 months of their previous purchase. What's scary for the US housing market is that this rate of home flipping is even higher than what we experienced in the bubble in 2005. But in particular, it's really cities like Phoenix, where 19% of home sales are flipped, Charlotte, where 18% of home sales are flipped, as well as Atlanta and Jacksonville, where 16% of home sales are flips, that are most in trouble. Because when you really think about it, like in a place like Phoenix, where 18% of the sales are flips, what we are seeing basically in that market is that investors are just basically selling to each other. Whether it's a flipper selling to another flipper or a flipper selling to a corporate investor, we had a lot of non-fundamental demand supporting those housing markets. And now that interest rates are surging, and now that home flipper gross return on investment has plummeted to an all-time low, these flippers are making less and less each time they do it. We are going to see these flippers abandon the housing market in future months, which is going to push home buyer demand in America down even further. Now, at this point, I need to issue my own warning here because I'm seeing a lot of irresponsible behavior in the housing market right now by realtors. Because despite the fact that the National Association of Realtors is issuing these pessimistic warnings on future home buyer demand that I talked about earlier, we still see a lot of individual realtors hyping up the housing market and saying you better buy today. Like for instance, check this out everyone, a realtor in Dallas just said that a recession could bring too much demand for some suburban Dallas neighborhoods. He says, I worry that if a recession does come, we'll get more people moving to Dallas and we'll have less product and more demand in the housing market. And on some level, I almost have to respect the shamelessness of this realtor in Dallas trying to spin a recession into a positive for the Dallas housing market. Like, that is an amazing statement in some ways, but it's one that I have to call out because a lot of you are emailing me, you're leaving comments here on YouTube, and you're telling me that your local realtor is saying things like that home prices are only going to go up and that you still better buy today. And I just want to let you all know that that is not true. Because when someone pressures you to buy in today's housing market, they're pressuring you into buying in the most expensive housing market in all time in America, adjusted for inflation. We can see that inflation adjusted values in 2022, they're higher than they were in 05-06, and they're more than double the long run 130-year average. So the housing market's going to crash, everyone. The data's right there in front of you. So any realtor who's saying you must buy today because prices are only going to go up further, they don't know what they're talking about. Specifically in certain housing markets in America where the home buyer demand has dropped off so fast in the last couple months that price declines are inevitable. For instance, in San Diego, there's been a massive 22% decline in home sales and home buyer demand year over year, according to Redfin. If we head up north to the Bay Area, San Jose's seen a 25% decline. Boise, Idaho's seen a 21% decline. Las Vegas has seen an 18% decline. And basically the fact that every market on the Pacific and Western coast here is in orange means that home buyers have dropped out left and right. Now, if we zoom back out, we can also see a lot of orange in places like Texas. There's also a lot of orange in Florida, everyone, particularly in a market like Naples. There's been a 35% decline in home sales in Naples. That's the biggest year-over-year drop in America. But as I told you all earlier, not all housing markets in America are seeing this big drop-off. Certain areas, particularly in the Midwest and Northeast, are still seeing stable home buyer demand. In fact, home sales are still going up in some markets. If we zoom in on the Midwest, we can see a market like Akron has actually experienced an increase in home sales year over year, while a place like Columbus has only seen a 3% decline. If we go to Western New York, Rochester, and Buffalo, we're only at a 1% decline. Other markets where home buyer demand is holding steady include New York, New Haven, Connecticut, and Worcester, Massachusetts. And this highlights a really interesting trend that I'm seeing in the housing market right now that I haven't really seen anyone else report on, and I'm actually curious what you guys think about this trend and why it's occurring. It's the fact that the housing crash and the decline in home sales and the increase in inventory, it's occurring in the South and it's occurring in the Mountain West regions of America. Like if we look at inventory year over year, according to Realtor.com, in places like Austin, Boise, Phoenix, Colorado Springs, and Raleigh, because the home sales have gone down, the inventory's gone way up, over 100% year over year. There's 2 times as many homes on the market now compared to a year ago. But then if we scroll down to the bottom of this list and see the markets that still have an inventory decline where there's fewer homes on the market, it's places like Bridgeport and Hartford, Connecticut, Chicago, Illinois, Albany, New York, New Haven, Connecticut, Syracuse, Scranton, Milwaukee, Portland, Maine. Why is it that the tightest and hottest housing markets in America with decreasing inventory are in the Northeast and Midwest, in the places seemingly where everyone moved out of over the last couple of years? They're the places with the most home buyer demand and the fewest new listings. Meanwhile, all the hottest housing markets from the last 2 years, all the places where people were supposedly moving in droves, they're the housing markets that are crashing the first with the biggest reduction in home buyer demand. What do you all think about this trend? Let me know in the comments below why you think this is happening. I have my own theories that I'm going to reveal in future videos, but I want to hear what you think. Along with that, also make sure to smash the like button and show your support for this channel.